The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing? Welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and I just want to go over a lot of things in the market with you today and just talk about some setups that you can look at this coming week. Earnings season is basically a kicking off after this bell here, and we're going to see how things go with a couple more announcements coming out and just seeing that's going to have a big impact on the market. So what is going to be happening, what's coming up, and what can you do to maximize your leverage, minimize your risk, and be one step ahead of the markets. So feel free to give me a call with any questions that you have. The lines are open right now at 877-927-6648. And as always, first thing we like to do with you is just go through where the markets are right now and just give you a quick update across the board. We got the S&P, it is down 11 points. We got the Russell down 9.8. The NASDAQ down 38 and the Dow down 69 points. Looking over at our metals, we got copper down just 0.0015, basically flat on the day after a big move yesterday. We got gold down 9.4, and we got silver down 1.132. Looking at our energy sector here on natural gas and the CL contract, we got natural gas is up 0.027. That's a 76% or 0.76% move up. And we got oil is actually down 73 cents, though it has had just a very interesting move today. It was just climbing on some incredible volume. And you can see that right there. Let's see here. Make sure I update my contract there. It's actually a little bit higher. So we got it up to 92.18. And looking at that, I mean, like that's just a huge move. And you know what? I figured, I was like, that is not right. That is a stock CL. Up 2.61. So just a meteorite move, and a lot of reasons for that coming up that you're going to want to be aware of, that you're going to want to be able to take advantage of. And how can you trade something that moves like this? I mean, we've been seeing these $3 and $4 moves on oil multiple times over the last several weeks. And, you know, it's one of those things that's a great trading opportunity as long as you can limit your risk. And we're going to talk about that. And, I mean, it just keeps breaking out. If we look at this setup right here on oil, I mean, check this out. We got oil right there. See the volume breakout right there. So we had the pullback, and then it broke out higher. We have another new high here. Then we get a pullback on volume, and then it breaks out higher. We get another pullback on volume. It breaks out higher. We get another pullback, and it breaks out higher. Each time, volume is exceeding the breakout of what I call the apex pattern. So alert is the top point, okay? That's basically have a new high with a lower high. And then P is the pivot point. That's the lowest level, basically where the order stopped getting filled, sensor including the alert bar. And then you got your E, your entry point, which is one tick above the high right here. That's your early entry. It's how to get in quick on it. And then you got your X, which is going to be your breakout. That's your confirmation of the breakout. So long as the volume bar on this X bar, this breakout bar, exceeds the price of the high of your A bar, of your alert bar. And as you can see, volume here exceeded volume here. And then right here you can see like volume at this level was exceeded by the breakout on volume on this level. And then you can see right here, the entry there, volume on this was exceeded by the breakout here. And again, we see right here, the volume on this level right here was exceeded by the volume on this breakout. So just to continue ongoing apex pattern there, and that X again needs to have a volume breakout. And we have definitely seen that today on oil with a massive 3% move on the day. Looking on over and checking out a couple of the other contracts, looking over at our ags. We got corn flat on the day, up a point. We got soybeans up 4 points. And then checking out, so basically pretty flat on the ag side, which is pretty rare lately. And then looking over at our currencies, we got the euro dollar down 97 ticks. Not really liking the news that's been coming out From Europe, we'll talk about that when we go over the fundamentals. And looking at the Aussie dollar, down just 8 pips, the pound dollar down 30 pips, the U.S. franc up 70 pips, U.S. Canadian up 21, and the U.S. yen down 7. So almost across the board, we're seeing constant strength in the King dollar there. So just that continues to rise. And like I said, we got that another breakout right here. Volume's pulling back, and we'll have to see sort of if this thing turns around and keeps going or not. But that is just, like I said, a huge, huge move. And the next thing we like to look at every day is we talk about the fundamental announcements, what happened last night, what's coming up, so that way you are ready for trades. And so you're learning about, one of the reasons I go over what happened is just so you can, start learning and keeping that in your mind, so that way next time these things come up, these announcements come up, you're ready for me. Hey, how do I want to place my trades? So, I'll go ahead and pull up, like I said, the oil right there, just an amazing, amazing move today. And then looking at euro dollar. Now, one of the things you can do on euro dollar is you can always look at the futures contracts. And on the futures contracts, why do you want to do that? Well, because you get volume with the futures contracts. And it's accurate volume, it's exchange volume, it's high volume. And we can see right here, we get this breakdown, and then we get this whole, consolidation phase. And then all of a sudden, boom, it breaks out. And it breaks out with more volume right here. And then we see again, it breaks the level again. Look at that, another apex right there. So, and we can see that it is broken by this level. So more volume here than here. So we're looking at the volume down bar there because we're in a downtrend. And we can see, confirmation of that. And then again, we see right here, it actually slows down. Notice how on the euro dollar, we have our last breakout bar right here. And then we get our apex. And this apex, we are starting to see wider volume, but it did confirm the down move because it did at least break the volume of the apex entry. And so that's one of the big things that we're looking at. I don't like the fact that the volume has started to lighten up, but I do like the fact that at least on the breakout of this A pivot entry exit bar right here, confirmation, not really exit, but confirmation bar, that we are able to actually see a breakout volume from the last low there. So basically it continues to push through those orders on higher volume. And so we'll see real soon as it's going down. We did see some drop in volume, picked up a little bit, but then kept going down. We're starting to see it pick back up on the downside. And now what we're really looking for is it going to break this low on the euro dollar? Okay, so the low that we have on the day right now, is it going to break it on higher volume? And if it does, we should see a pretty good move. And so that should be a continuation of the pattern. And again, the E, the entry price right here, would have been right here, 1.2885. And so we're right below the low of that. The low would be 1.2886. So we get in right here, set our stop. Where would you set your stop on this pattern? Well, you want to set it where the orders ran out, where the consensus of supply and demand met, and no longer did demand exceed supply. In other words, orders signify consensus of supply and demand. Where there's lack of orders, then the market will move to find where there is consensus of supply and demand. And so right up here we see that this would have been your stop on this trade. Right here where it left out, this pivot level. This would have been your stop on this trade. So, and then going back, where we're looking for our entry right here, this would ultimately have been your stop on this trade as well. So you may have got in a couple times on this trade, depending upon what kind of bar types you use. I like to use a unique type of bar. It's called a Renko bar, and but you have to use the right kind of Renko bar. If you use the wrong one, it's going to mess you up, and that really will get the noise out of the way for you whenever you're making your trades. So again, we're going to see right here, this thing breaks down a little bit further, then we're going to have a euro dollar setup. And so we can check out, what if we did want to go ahead and we want to go short and we want to tight stop and we think that maybe it's going to break out with higher volume. What could we do? What kind of trade is sitting there for us? And there's two trades you have. There's two options, okay? One option you have is you can get in on this early entry. All right, so that's basically like right when it breaks the high of the previous bar. So right here like this, or it's the low of the previous bar. So see how we have a higher low, higher low, higher low, higher low, lower low. As soon as it breaks that low, that previous bar, that's your early entry on the trade. Now your late entry, your confirmation entry, okay, is once it breaks this bar right here, and you can get in on the trade. It's getting in a little bit late, but it is at least going with it. And again, you're always looking for volume on that. And understand when that happens, you're probably going to see a pullback shortly after that takes place. And so, if you don't see some significant volume, then you're going to want to, basically run for cover, take caution, or use something like Nadex to take advantage of it. So on Nadex, if we go over and we check it out, I'm going to log in here. I'll show you exactly what it looks like. By the way, if you don't have an account, what you need to do is hop on over to TFNN.com and click on the Nadex banner. Once you click on the Nadex banner, click on the Create Account, the big orange button at the top. And you can go from start to funded, and you can fund with as little as $100. You can do that within as little as 5 minutes, okay? In addition, you can get a demo account right here under Our Products at the bottom, or under Our Products at the top. You'll see Demo Account. Click on Demo Account, and then right here you'll see Demo Dash. Go ahead and put in the username, first name, last name, phone number, and email address. Once you've done that, hit Apply for Demo. They'll send you a password. You'll have it in seconds. And so this is about a 15-second process for people who type slowly, all right? And you can get access right away. Once you get access, then you're able to log in. So you'll click on your login button right here, and you'll enter your login information. And again, they'll send you the password for the demo account. Now you can log in. You can change that password under the My Accounts tab once you log in, so that way you actually remember what your demo username and password is. And let's see here. I'll pull this up and show you exactly how it works. And we'll see if we can find a potential, how would you trade this trade setup. We're, of course, in the middle of the, lunchtime hour here, or, wrapping up the lunchtime hour. So we don't expect just an insane move, but, what if we can find a really low-risk entry in case it does decide to go ahead and decline? How can we possibly take advantage of that? So, again, right here under the My Accounts tab, you can go in and you can change your settings, and such as you can go in and change your password right here. And that way you remember, because otherwise you're going to forget your demo password. Another thing to do is go under your preferences. And under preferences, tip for you is click on Allow Multiple Order Tickets. You can say, flashes on. This may slow your performance if you have a really slow internet connection. But if you have a decent internet connection at all, you should be okay with the flashes, so you can experiment with that. Multiple order tickets, though, is definitely something you want to do, even if it's checked for, I don't know why, but for some odd reason, you need to go ahead and do it and click Set Preferences. This will allow you to go in now and open multiple order tickets at the same time, which is great when you're comparing different spreads and different binaries. So now that we're in here, let's go ahead and let's check out what trades may exist. And there's different ways to do it, but one of the ways just to look at what trade exists on the binaries. Real simple, 1.287 right there. And so I'm going to go in and I'm going to go to Forex binaries. I'm going to go to Euro Dollar, and I usually look at the daily spreads. These are tiered spreads, and you can see it's moved so far down that these are worthless now because it's such a massive drop there. But we can go over and we can look at the ones down here. There's still plenty of opportunity built in, and we can see that at 1.287 or so is where the low is. So we come on back, we'll pull these up and look at how the risk reward works on them and what you could possibly do to take a trade. Stay right there. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks. Thanks for staying right there. I'm coming right on back. Let's go ahead and check out what we got going on, what we can take advantage of on this euro-dollar trade. Going really quiet right now. And sort of got a little bit of support line here. We're going to see if we break through this level or not. And just trying to see, what options exist here on the binary trades for us to be able to take advantage of this. Now, understand, we have till 3 o'clock Eastern, 2 o'clock Central, so about an hour and a half left to see if we can hop in there and make some cash. So what can we do on this trade to take advantage of it? Well, if we go in and we say we can buy or sell a binary, and just in case you're newer, you don't know exactly how the binaries work, now, there are all different types of binaries, and there's some good reasons to avoid binaries that don't have what's called tiered strikes, where they just have one strike buy or sell. And I've went on that in my previous shows. I may go over that here in another show, maybe here in the next week or two, and just go into why you want to avoid other binary types. But these binaries allow you to have a great risk-reward is one of the main reasons, whereas other binary types may allow you to only, say, make $70 for every $100 risked, meaning $100 total loss or $70 win. Well, obviously, that's going to stack things against you, making you have to be right 60, 70% of the time in order to even, come close to being profitable. And, not that, hopefully you can be right that much of the time, but why the best traders I know often are not the traders that win the most often. They're the ones that make the most when they win versus losing the least when they lose. And it's more about what you make when you win. And really, it's more than anything about what you lose when you lose. And then, of course, what you make when you win than it is about how often you win or lose. And a lot of traders, they try to go for that just high win ratio, and they don't understand it. Winning doesn't make you money. Making money makes you money. And I know that sounds sort of funny. Yeah, of course you do got to win to make money. You got to be profitable to make money. But if I win 9 out of 10 times, but I only profit $1, and on the 10th time I lose 10, who cares that I win 90% of the time? Okay? If I lose 9 out of 10 times, but I lose $1 every time I lose, but I make 10 when I win, who cares every time that I lose 9 out of 10 times? So obviously, it's going to be hard to stomach for any trader to lose 9 out of 10 times, and that means you probably need to pick a different career, unless you can consistently get that. But to sum it up, you want to average the two different things together. You want to average your probability, and you want to put the profitability in place. So ideally, maybe you're like, say, losing, we'll just say $2 when you lose, all right, but making ideally $6, okay? So, doubling, you got a 3-to-1 risk reward there, making $6 when you profit on a trade. So let's say half the time you go in and you're profitable. And what I'll do is I'll pull up an Excel sheet just to show you this and how just important this is. And we'll put this together because this is, I think, an essential element in trading, is understanding just how the profitability, factor really factors in to any trading plan. And so we go over here and I'll open this up and just zoom it in. Okay, so what we're going to do is we're going to say when I win, let's see, profit, I make this much, losses, lose this much, okay? And then we'll put, so we'll say, $6. And then we'll put losses, negative $2. And then we'll go over here, just, we're using a small number just to make it really easy. And then we'll say, winning and losing, okay? So let's say I, win 5 times and I lose 5 times out of 10 trades. All right. Then we'll go over here, and now we're going to say, okay, well, that means that I made $6 5 times, and I lost $2 5 times. So my net is going to be pretty simple, right? It's simply going to be, so here, 30. I know it's 20, but I'm just trying to, put it in the formula for you. Really 30 plus 10. So, because we got negative 10 there, right? So 30 plus negative 10. So a $20 net profit. Okay, and I can go in here, of course, I can make this, 60 and negative 20. Or I can make it 600 and negative, 200. Okay, and that's a 50-50 win ratio. That means my, biggest possible drawdown on this total, if I lost 5 in a row, was $1,000. And, my biggest possible run was $3,000. My net being $2,000. Now, we can also go over here. What happens if I make this where I, 4 out of 6? Still profitable. Okay, 3 out of 7. Still profitable. 2 out of 8. So 3 out of 7 there. 2 out of 8 is where I actually lose. So I'd have to basically, if I can maintain a 1-to-3 risk-reward ratio, okay, so meaning every time I lose, the most I lose is, 1/3 of what I make when I win, when I profit, then I'm able to go in and actually still net a profit. And so now I can actually be a 30% winning profitable trader and still be net profitable. This is a huge key in risk and reward management. Stay right there. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I just want to go over a few things with you here. We're checking out the euro dollar, looking at what spreads, what binaries may be available. Basically what opportunities are out there for you. And as we did call, we talked about basically euro dollar going down and breaking this level right here, and that being an entry at this price. And so obviously, you'd be looking to possibly take stops, move whatever, however you want to play it. But one thing definitely to notice is notice how we broke with lower volume, okay? So that means that, what does that mean? That means that you probably should be looking for this trend not to continue or reverse, basically to go flat or reverse soon. Now, the thing still could go for 50 more pips, but as far as these big moves we've been seeing, it's running out of steam, okay? So the lower demand price is drying up, all right? So the supply demand, the order flow, the supply of order and demand coming together is not happening. It's getting lighter and lighter. So, of course, time of day, that's not a big shock. We even saw this over looking at the oil contract, and not quite as stark of a difference. But as you can see, higher demand right there on oil. We talked about this higher demand, and then we check this out right here. Really, these two right here, these two bars, looking at these volume bars, this one right here is a little bit lower. Or right at this level, we got 10,696 contracts, 10,851. So, I mean, just barely. I mean, not busting through, not significant volume, but at least showing a little bit of order demand. But right here, we see we had 2 of these in a row, and just really a lot of strength running into this. And but right now we showed a definite weakness and then some, a big upsurge in strength. And I wouldn't be surprised to see a big downsurge soon on oil. So let's go ahead and check out a couple different trades we can do, one on the oil and one on the euro dollar, and see what's going to work best. And so right here we got euro dollar. So if you wanted to go short, now again, I would not expect this to go far down. I really don't expect it to go far up. But if you want to place a trade, what are some possibilities? Well, right now, again, this is based on the spot, so this is really important. One of those things you always want to make sure you're looking at, and is when we go over, we want to look at Euro USD, okay, and just sort of seeing right there what we're looking at. And let's see here, we're at 28.57 or so is like the low we got on here, and with a little bit of an uptick. And so 28.57, 28.60 right there. So you can see if you do the 28.60 to end the money. Now this is when can you wait till the end of the day, but it is a possibility you could play on that one. And then that's at $39.50, basically a $40 risk, $60 reward. And you can go down here and go a little bit lower, and you'll be amazed. Like all of a sudden, boom! It's a $5 risk and a $95 reward on that trade. So if you're wanting to continue to go short, basically over the next, let's see what do we got. We have till 3 o'clock, so next hour and a half on this trade on a $5 risk. What has to happen on this trade? It actually has to close below 28.40 if we're going to make that $95 profit. So where would that be on our deviation list? And let me see if I can go ahead and pull that up for you. We'll check it out here. And on the deviation list, what do we got for the day? And these are about to be posted here. We're wrapping up a final couple things, and we're going to be ready to go, so you'll be able to get access to these. But checking out the oil contract right here. And not the oil, sorry, we're looking at the euro dollar. Come back to oil here in just a second. So on euro dollar, looking at that move down, we're at 28.64, and so we can see right here 28.62 is our 0.7 deviation level. And so we could move a little bit further down to 28.18. And so that actually is a trade that I think we should go ahead. I'm going to go ahead and hop in. I'm going to take that one, click on that, and go in. We can do 10 contracts on it. We got $45 in, and then we have a potential of $955 profit on the trade. So we'll see how it ends up in the end. But if it goes below 28.40 again, that is going to be below our deviation level of 28.18, and that's where we'd expect a very high potential market move down to that level. So we're going to go ahead and put that one on there. And again, we'll have to see sort of what the market does. If it, I do expect a pullback. And now what you could do, another way to place this exact same trade, okay, is let the pullback happen like it's happening right now. And I'm just trying to do it during the show because we have limited time. But, that's why we did a very limited risk trade there. But let the pullback happen. And then when, I'm looking at 10-minute bars, okay, when the next bar breaks the previous bar's low, okay, so like right here, if we zoom in on this section, like this bar broke this bar's low. So let's say we're right here right now. Okay, this is, say, now we don't have these bars. It's pulling up, pulling up, pulling up, pulling up. And notice how it's not breaking we've got a higher low, higher low, higher low, higher low. And then it breaks the low. That is really the ideal entry point because now all of a sudden, at least price action, okay, is starting to move in your direction. All right, in the short direction. Right now, we're sort of fading the trend, right? It's going up. And so prices action isn't really in our direction right now. And so this really is your ideal entry price point. And so you can use that to help you on timing your trades. Of course, always want to bring in volume with that, seeing lowering volume as it rises. But if we go over here again, and let me see. Zoom in on that. And notice how, boom, it broke the volume level there of this bar, and then all of a sudden we saw lowering, lower volume, and then we started to see some price strength. This is really good. That's just to compliment. This is the early entry. We got in on that strength, and then it did break through it, and so that was another profitable trade for the day. So that's just one of many ways to do it. But as it pulls up, you can actually get into this trade, possibly even less. And what you may be able to do is you may be able to get a higher strike depending upon how far it retraces. So you might be able to get in at that same level, like on a 28.60 binary, so even 20 pips higher. And another thing you can do is you can check out the 1 to 3 o'clock ones and see if there's a better opportunity. We got 28.27. This is 28.40, so 28.40 much better. And you'd never want to take this 28.27 binary. Okay, and by the way, binary, if If you buy, you're saying the statement is true. If you sell, you're saying the statement is false. So if I buy, saying the euro dollar is going to be greater than 1.2877, that means that I believe that at 3 o'clock, the euro dollar spot FX will be greater than, again, spot FX, not spot futures, spot FX price will be greater than 1.2877. If I sell, I'm saying it will be less than or equal to, okay, 1.2877 at 3 o'clock. So why would I not want to trade this 28.27 at 3 o'clock? It's $96 risk, 28.27. Well, the dailies also expire at 3. So can I get a higher strike if I'm going to sell this? Okay. So let's just look at this one right here. There's a $4 risk on the trade. If I hop over to the dailies and I go down here, can I get a higher strike than 28.27 for a $4 risk? Well, let's say 28.20, so 28.40. Yeah, there we go. Check that out. Okay, 28.40. And obviously a higher strike. And it's only a $3 risk on that trade. So that's actually a better trade. It has a higher probability of being profitable. Not that choosing it increased your probability, but the market doesn't have to move that additional, 13 ticks down. This one's at 28.40. Okay, meaning if you're selling, you're saying it's going to be equal to or less than 28.40, only a $3 risk. This one's at 28.27. Both of them expire at 3 o'clock. Okay, so if I can get a higher strike to sell, meaning higher probability because it doesn't have to move as far down to be profitable, that expires at the exact same time, there is no reason why I would choose it. Now, if it expires at a different time, that totally changes the equation, because now you have expiration factoring in. But the exact same expiration, the exact same settlement time at 3 o'clock, no reason to choose the 3 o'clock intraday binary. More risk and less reward on that trade. And the only reason we probably even have a quote on this trade is because there's some other trader making a market right here. That's why there's only a couple contracts you're seeing. But right here you see, here's the real trade that's going on. All right, so we got that trade in. And now let's check out, if you saw the other side where you could get in, then you could possibly have an arb trade, if you saw somebody making a market. And so there's a lot of cool ways you can play that. But without getting too off-centered there, again, we had the trader we got in there, but you could also wait until it breaks the previous bar's low. So as soon as it does that, then you're ready to get in. Now, one of the ways, what if you want to do a market order, okay, on Nadex, and you don't want to put your order in and it goes into working orders and then it doesn't get filled and you're waiting on it. You just want to get filled right away, okay? Well, what you could do is, let's say this is the trade that you have ready that you want to do. You can go in and you can literally adjust the price to say $90. All right, I'm going to sell one of these just so you can see what happens, okay? So actually, let me see here. I want to sell a different strike, otherwise it won't. I'll go ahead. I'll sell this at $90 and watch what price I get filled at. Okay, because remember, this is a limit order, which means at or better, and I should get filled at the or better price because it's 97. Selling at 97, a higher price is better than selling at 90, and so it breaks below it. I put it below the market because I want it to get filled right away. Because if it's moving in my direction, all of a sudden this binary can change really fast, and so I hit place order and I'm going to get filled. Boom. Now all of a sudden I have 11 contracts. Okay. But let's check out what I got filled at. So on my order history tab down here, let's see here. Let me open that back up. Order history. Then I put it in at 90. Okay. And I got filled. All right. This one that just happened right here. I got filled at 97. All right. So I got filled at the or better price. And so that allows me to sort of basically, in essence, have a market order, you could say, ready to go. You can do the exact same on the spreads, where you actually put your price in at a worse price. Okay, so like $90 obviously be a worse price to sell at than 97, and it'll fill you at the or better price that's available at that quote at that time. And if the market moves, of course, that can always affect what price you get filled at. So don't put it at a price that you're not willing to get filled at. But from my own experience, really just how limit orders work, wherever the orders exist in the market, you'll be able to get filled because you're meeting that order demand. Okay, so pretty cool thing to check that out and understand just how you can use, in a sense, a market order on the Nadex platform by putting the price in at a worse price to get filled at the or better price. And but again, always on market orders when you're doing something like that, make sure you're doing it at a price level that you're actually willing to get filled at, that you will not be upset if you get filled at. Now, let's hop over here and let's check out the oil trade. And on the oil trade, what we got going on is oil is basically, remember I said right here, this volume, we're not seeing that strength in volume at all. We're also not seeing, basically continue to rise as it breaks through it right here. And so really, I'm just not impressed by the volume at all. And if we go over to the deviation levels, where we at right now, we hit a high of 92.91. And so I'm going to go over here to the oil contract. And on the high side, 92.71 was actually our deviation level. Okay, so we went about 20 ticks past that. And right now, we just basically came back down to our deviation level. So this is definitely a reversal point. We're going to hop in on here, see if we can take advantage of this, and go to commodities, go to crude oil. I know it seems crazy, reversing something that's been going up and is up like 3 or 4% on the day, but sometimes that's the best time to hop in and go the other way because you're at a maximum expansion point. And so let's go ahead and let's put in, there's a lot of different ways I can do analysis and show you, but for a little bit of speed, to show you different ways to play the trade. Looking at a move down, where do we think it can move down to? Well, 91.69 would definitely be an area. That's the previous deviation level there. So let's see what we got. We got 91.69. We got 91.02 are definite levels. So let's check it out. 91.50. Okay, we can get in for $4. So I'm going to go ahead and check out that trade and put on 10 of those contracts, and that gets us down to 91.50. So that puts us actually a little bit below our 0.7, but definitely above our 0.5 deviation retracement, and that'll be 91.69. And so I can also go over here and I can look at, okay, well, this big run that we had this morning, and you could say it definitely started right here. There's a lot of different ways. You could go way back here. There's been so much going on. But price will be when it gets to 91.50. So since I know that, and since I don't want to have a winner turn into a loser, I'm going to put in my take profit at $50, and I'm actually going to do it on both of my trades here. My euro dollar, same thing, $50, hit place order, and by putting those orders in there, then now they're going to be working for me, okay? And I can basically walk away. I can do whatever I want to. Now, I don't have to go for 50. I can say, hey, you know what? I got in at $4. If I get out at, $20, that's an insane return. But this is sort of my price point, my expectation on movement. And I do have a limited time. I have till 1:30, so I only have about another 40 minutes. But we'll see if oil can make that retracement or not. That's why we're doing a very low-risk trade. Stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, thanks for staying right there. We have some other good things and adding up. Just, we'll see how it all turns out. But right here is we have a basically, I think, as I'm learning how to do this, we got a Gartley, potentially I guess you could say a Gartley butterfly on the intraday on the oil. And I'm, like I said, I'm getting new and learning exactly how this works. But we got a 23% extension right there with a 0% stop. And notice how that stop definitely has served really well. And, of course, we've been a little bit careful because we had this volume breakout, so you would not want to get in on the 23%. But right here, you could get in up here, and looks like we have a good trade. So a lot of things adding up in our favor, and I'm looking for a move again down to what we got over here is a 91.50 level. We got a lot of basically right here on our Fibonacci retracements. We have basically some confluence zones happening, and they could work out really well for us. And if they do, we'll have a great trade. And just I'll wrap up real quick, go over a few things on just the news and what's coming up. Just some reminders. What do we have going on tomorrow? Well, tomorrow, right here in the U.S., it's going to be pretty quiet all in all. Even overnight, we don't really have a whole lot happening. And we'll have tomorrow evening, 7:30, you'll have the employment change unemployment rate for the Aussie dollar, which has been under some pressure lately. And the G7 meetings are going to kick up. The Aussie dollar is going to kick off at 7:30 Central Time, and so that'll be your Aussie dollar trade set up. And then tonight, the Swissy over there, the chairman, is going to be speaking at 10 o'clock tonight. So if you want to look at your Euro franc trades or USD franc trades, that would be a time to be looking at it 10 o'clock Central, 11 o'clock Eastern tonight. And beyond that, not a whole lot more going on. Pretty quiet so far. Now, that is the fundamental government announcements. What else do we have going on that is really, crucial, that's really important? Well, be watching out for those earnings. They're coming up, and they're going to be potent. They're going to be powerful, and we want to make sure that, you're ready for them. So that's the nice thing. Nadex will be opening right back up here a couple hours after the market closes, and you can hop in and take advantage of that with limited risk and, great potential reward possibilities. And that pretty much wraps that up. We got the market looking at it right now. We have the S&P is down 9 points. We got the Russell down 8. We got the NASDAQ down 33 and the Dow down 62. Copper basically flat on the day, gold down 8, and silver almost flat on the day. Natural gas is up 0.077, making a huge move at 2.26% on the day. Oil, as we've been talking about, up 3.5% on the day at $3 overall, and starting to pull its retracement right now. Hopefully that trade will continue to go on, so we have a nice profitable trade setting up for us. And then looking over at corn and soybeans, still pretty flat on the day. Looking at euro dollar, it is down at 97 ticks. Pound dollar down 32. U.S. franc up 70. U.S. Canadian up 21. And U.S. yen down 7 ticks on the day. And that gives us our market wrap. And we can go over here and check out the other trade that we put on. We got that oil trade, and we also have our euro dollar trade. And just sort of seeing how euro dollar is doing right now. Still, we're waiting on that. If you're waiting on that timed entry, that better entry. And sort of like over here on oil, we have that going on for us, right? Because see how we're looking at that reversal. If I want to go short, I like to see the market going in my direction when I get in. Okay, I don't just like to fade, and that's just how I trade. And so if I want to go short, then I need to see the previous bar's low broken. If I want to go long, I need to see the previous bar's high broken. So we got in right around here. This previous bar's low was broken, and I'm riding that one on down. We'll see how the trade ends up overall. But we're looking for oil to move on down and ideally close below 91.50 on the crude pits there. And on euro dollar, we're looking for it to possibly move down to 28.40, and that, of course, is going to depend completely on just how the trade setups up. And even if you get an entry, because you got to wait for that previous bar's low, that's the best way to take the trade. Or you may be in already in that small risk trade. Stay right there. We have a great show coming up for you, and I will see you tomorrow, 1 to 2 Eastern Time.